Yo, what is happening, everybody? Welcome to another episode of Gold Rush here on Stock Market TV. We have Jason operating a little bit out of pocket today, so we will not be seeing his face, but I think my face is pretty enough for you, so we should be fine on that front. And we have plenty of charts to show you, so it's not about the face. That's not what you're here for. Let's be honest. We have a lot to talk about today. We're going to talk about some market breadth. A lot of talk out there about the world ending and the U.S. being the next Zimbabwe and everything's going to hell. I don't think that's the scenario we're in. We're seeing a pretty significant market rotation right now. So we're going to talk about some of those areas that investors are rotating into and where we think the next 10x trade will be. And we're going to talk about bonds. I think a lot of people are overlooking the bond market right now, but we're seeing some major moves in bonds right now. The TLT maybe isn't moving, but I think a move there is coming for sure. So let's get into it. I see we have a very lively chat today. I appreciate all of you being here. Please don't hesitate to drop any questions in the chat, and Jason and I will get to them later in today's episode. We love to interact with all of you. So if you are on the Twitter, I know this is streaming to Jason and I's Twitter. So if you are over there, pop on over to the YouTube so we can see your comments and have a conversation with you. But without further ado, my good man Izzy, we have a new producer today. Gene, the regular man behind the scenes, is out of office. So Izzy, if you will throw up slide number 2, let's start out with some market breadth. Jason, you brought along this chart of new highs versus new lows, overlaid with the New York Stock Exchange, and this looks like a bull market to me. There's plenty of things out there to suggest more defensive behavior, particularly consumer staples, absolutely ripping higher, especially in relative terms to the broader market and discretionary. That's kind of at the top of my bearish checklist right now, but it's really hard to argue with a chart like this.
Yeah, what I'm looking at here is just the fact that we are in a very strong bull market, and at the same time, there's a big rotation happening, and it's something that I've posed the question many times: if the Mag 7 was in a downtrend, if the rest of the stock market was going up, would it be an uptrend? And the answer is probably no. If we're looking at the broad S&P 500. But if we're looking at the New York Stock Exchange or the Value Line Index or any of these indexes that are a little bit broader, looking at mid caps, small caps, basically everything in the New York Stock Exchange is the one that you're currently seeing, we are seeing that we are in a strong uptrend still. So I think the big thing that we need to keep in mind is that we're just rotating through different sectors at the moment. And it could be a little bit more of a liquidity event at times. You're seeing today, everything is kind of selling off at once. I wouldn't overthink these types of scenarios too much.
Well, Jason, what do you think about liquidity? Because, when I think of liquidity trades, I think of, crypto, probably
Mhm.
at the very top of my list.
Yep.
Crypto's been getting the shit kicked out of it. And I think, I don't know if this is perfectly accurate, but precious metals to some extent are a liquidity trade. And we're seeing silver down another, what is it, double digits, 10%, 11%. Let's see. I'll pull it up right now. Silver's down 10.5% right now as we are recording this. So certainly seems like there's some liquidity being pulled out of the market right now.
Yes, and that's kind of the thing I'm showing. So for today, like if you're looking at the scenario and you're going, this is the end of the world here, it's mainly like this is a liquidity event. If this keeps continuing the way it is, where you see everything selling off at once in a huge way, that's something that we really need to pay attention to. But for now, it's not something that's structurally breaking any major primary trends at the moment. That can happen, but at the moment, it's like just keep a level head. This is either going to be short-lived or not. And that's the hardest thing to say about trading is like, I don't understand what's going to happen tomorrow, the next day, or the day after that. I do not have a crystal ball currently. And as long as I don't have that, what can I do? Well, I can pay attention to the market. I can keep a level head and go, all right, everything's selling off today. Makes sense. Some of the things aren't selling off that crazily, though. If you look at some of the different areas, the different sectors, they don't look that terrible just yet. I remember even looking today, it was a little bit ago. I'm not sure if this is still the case, but corn, soybeans, and a couple of the commodities were actually holding up pretty well today. So it was kind of interesting to see that with all this carnage ahead. But oil is down a lot, gold is down a lot, silver's down even more. And we told you guys where we were selling that silver trade a couple weeks ago. We put out that note before that was Monday for our members. We also did a live. I did a live. It was Sam was out that week, so it was just me talking about that trade, our levels to sell, where we would sell on a trend model, and so on. So we're able to get out of that trade. So that's not really hitting the portfolios currently. But at the same time, if you look across the board, it's not really as bad as it feels. And that's the thing. When everything feels like it's all going down together and your brain's going, this is the end of the world and I can't possibly keep doing this, that's a scenario that's really probably not real. So once again, just look at the data. The data continues to point to probably more upside in this market. If we go to the next chart, Sam.
Yeah,
We're
I want to give a shout out to Jay Hampton in the chat. It says Rig is an amazing chart. And you know what really is an amazing chart? It was the commodities trade of the week that we highlighted on Friday. And I don't want to give it away. We have people that pay a lot of money for that, but all of the Gold Rush members got that trade, and it's an energy stock, one of the bigger energy stocks, and it's up 1.5% today. While energy is getting hit pretty hard, crude oil is down over 2%, and this stock is breaking out to new highs. I think it has tremendous upside from here, and it has very liquid options, and I'm involved in the options there. So, you know, energy is a hot trade right now, but we're still seeing names rip to new highs there. So, Jason, you wanted to show this industry performance. I believe this is year to date here, and
Yep.
sure enough, this name that I'm referring to is in the OIH, in the energy services space, and it's no surprise it's breaking out today while energy's taking a hit. You talk about this all the time, like the areas that lead the market at the beginning of the year tend to continue doing that the rest of the year. And that's exactly what we're seeing in energy services. I talked late last year about how I thought the oil services would be the best trade in 2026. And so far, I've been proven very right. It's not that I have a crystal ball, it's just that there were a lot of things aligned for that to play out. And it's not always this easy. I'm not saying I always get it right, but man, it's been a great trade, these energy services. And I'm still looking for more exposure there.
Yeah, I think the idea here is to continue to be long what's working and out of what isn't. Now, once again, everybody has ideas about, let's say, Bitcoin, let's say growth stocks, let's say large cap tech. We all have ideas, are those ideas because it's really hitting support, or it's really something that we're like, okay, we got to buy this falling knife currently, especially in something like Bitcoin, let's say, or software. Or is it a scenario where it's like, hey, let's ride these winners? I don't know what wins to end the year, but I can tell you just from back testing that most of the time the leaders continue to lead. Anybody that studies relative strength knows that. And if we look at OIH and some of the names that we've been highlighting in Gold Rush week after week that have just been making a killing, and this is honestly where you get your next 10x trade. Last year, we highlighted so many miners that just had huge moves and made ridiculous returns. And usually that's not going to be the same exact scenario year after year. But I do see that gold miners are still hanging out up there, even with the sell off, even with all the volatility. They're hanging out up at 17% still year to date. ITB, which is the home construction ETF, that's gotten up there. That's actually bottoming out and moving higher currently. Moo, same scenario. That's an agribusiness ETF. We've been highlighting names in there as well for our members. That has been bottoming out, making new 52-week highs and moving higher. Sam highlighted today on Twitter, TAN. Tan's another one that looks good. Consumer staples look good. Semiconductors look okay. And metals and mining are holding up decently. Emerging markets really is the area that everybody's overlooking. That's probably one of the coolest trades in the market currently and has continued to just work. And if you go back here, this is a chart going back to that bottom that happened where you see the red line and the green line, the arrows. We're looking at that 2025 bottom that happened in EWZ that coincides perfectly with that top that happened in the US dollar that same year. So looking at both of these, it's like this is the trade. When I say the term it's all one trade, which I say all the time for years, what I mean is if we're looking at the bond market being in a bull steepener, if we're looking at the dollar being in a downtrend, the trades are going to be very apparent that's what's working, meaning things like energy are working. Gold miners were working very well last year. Let's see if those continue to hold up. We'll see. I'm not sure about that just yet. Same with copper. Copper miners actually are holding up very well, all things considering. So, then we look at the emerging markets. We're looking at Brazil right here. Latin America looks great. Sam's been highlighting the commodity countries. The commodity countries look amazing. So between all
They
of these
keep
things,
making new highs, Jason. Can't stop, won't stop.
yes. So between all of these things, we're in the scenario here to just continue to ride these trends, ride what's working, guys. I mean, that's the hardest thing to do as a trader is just continue to take advantage of what's working and get out of what isn't working. And Sam, Grant is one of our analysts at All Star Charts, great guy. He's always talking about the fact I always like his trading because he's very systematic. He's very much like me. He's looking at primary trends and he's talking about how well he's doing this year. And while everybody's struggling, and it's really just because he's following what's working, getting out of what isn't working, getting into what's working, and looking at it like a quant would, like myself or any other quant would look at it, which is I don't care what it is. I'm going to be long it when it's in an uptrend. I'm going to be out of it when it's a downtrend. I'm not going to overthink it too much.
Totally. And I think that's why your process is so valuable is because you take so much of the emotion out of it. People just average investors have such a hard time buying something like EWZ. Like they're just so conditioned to buy the S&P 500 and buy the Magnificent Seven. It's been working for so long. So for investors to rotate into something like EWZ, it takes a long time. They need to see this thing double before they get involved. Like it's
To the
very much
top when they
not a
do.
crowded trade right now.
That's an interesting thing I think also about gold is like when we're looking at it and we talked to members about this week, which is if you're a financial advisor or you're one of the big banks and so on and you're making a decision when to add something like gold to the 60-40 portfolios, the basically those are stocks, 60% bonds, 40%. You're like, hey, I want to make a 10% allocation to something like gold because this will help during times where bonds aren't working or whatever thing they're going to come up with. They're going to do that most of the time right at the top. It's the same as when they're going to make more allocations to Brazil. They're going to do that at the top. Everybody wants to think that the way flows work is that as they're flowing into these markets, I'm going to get involved too, because that's when they go up the most. Most of the time, you'll see these big volume spikes right at the tops. So, be careful with that. Just be objective. Ride the trends as they're working. Don't overthink it. Oh my gosh, it's Brazil. Who cares? If you need to look at an individual stock inside of it to feel better about yourself, go ahead. But once again, just rotate into what's working because at the end of the day, is our goal to support blank company or this person or whatever, or is it to make money, make our portfolios go up and enrich our lives and me help to enrich my clients' lives? And that's my goal. So continue to do that, and you're going to make a lot more money than the guy who's chasing basically shit.
Or the guy who has the ESG portfolio or the
Yeah.
or like the Catholic values ETF, you know, that is not the point here. We are here to make money. And right now, money is being made in emerging markets, Brazil, Peru, Chile, Mexico. All of these emerging markets are ripping higher. And I think the emerging market currencies have a very large role in that. because more so than the United States, emerging market currencies drive the performance of these emerging markets, emerging stock markets. Like the US dollar sometimes puts pressure on the S&P, sometimes it doesn't. But, we have a much stronger statistical correlation between these emerging market currencies in the stock markets. So I think CEW ripping to the highest level since 2018 is a very, very nice tailwind for this trade. And until that stops, I don't think money will stop rotating into places like Brazil that we just previously mentioned. And
Yeah,
Jason, you brought along this chart of the Papa Dow relative to crude oil. This is something we've been talking about for a long time. But we continue to bump against this highway to the danger zone. When moon crude oil.
it's the question, and just if we're looking at this, it's just an understanding that when we're looking at this market, and once again, intermarket analysis isn't a way to trade. It's a way to see where money is flowing in or out of. Somebody actually wrote that in the chat too, which is spot on.
The
Let's see,
ASAP Jack. Shout out ASAP Jack. Well done.
yes, let's see where money's
Somebody's paying
flowing in and
attention.
out of. And so, speaking of which, Freely also posted about liquidity events. Let me see exactly what their question
Yeah,
was.
Frey Lee said when liquidity events occur, where does the big money move their funds? Or is this a wait and see moment? It's a great question.
Yes. So when you're looking at this type of event, most of the time you're going to see these big sell-offs that are going to move drastically into certain areas. So you're going to see big sell-offs, then all of a sudden it'll be in cash, or all of a sudden it'll be in bonds, or some sort of safe haven. Think of COVID. At first it was everybody was rushing into the bond market, and then it was the bond market actually started selling off, and everybody was rushing into dollars. 2022 in an inflationary environment, kind of similar to how we are today. You saw everybody just running straight into oil, or sorry, into dollars and oil and commodities. So it's always a different type of event most of the time, and it also depends on how much liquidity is still out there. Currently, I think we have plenty of liquidity out there. Now it just depends on where it goes. Currently, it seems like emerging markets are able to shrug everything off, no matter what's selling off in the United States, which is pretty amazing. So I would continue to think that there's plenty of liquidity out there. And I'm seeing that it's just flowing outside of the United States currently and also into some of these other sectors. I wouldn't read into it too much. I think a lot of people are going to read into it. Oh my God, energy's selling off today. Energy needed to sell off. Nothing goes straight up forever. We saw tons of that. Remember, guys, you guys have been with us for a couple years, and if you guys have been around for a while, you've seen us be in these trades like silver, gold, the gold miners. How did those go? Was it a straight up road? Was it easy? Hell no. There was a lot of days where it was a big uptrend to a short term move. I mean, when we were in the middle of that uptrend in silver, I mean, there was some 20% down moves that happened within that massive uptrend that we saw. Not to mention there was 10% up days back to 10% down days. So there was a lot of volatility. So, this is a little bit of volatility and energy. I wouldn't overthink it just yet. I would just continue to ride this trend. Depending on your time frame, short-term time frame, sure, you could panic, lose your mind if you want to. Longer-term time frames like myself, I'm just going to kind of sit here, watch it, see how this all kind of pans out, and then go from there, because really it's not violating my trailing stop by any means. I mean, it's what's down 3% from the highs. That's not doing anything to me. Same with oil. It's only down a little bit from the highs currently. So we're just kind of seeing this over and over again. And this is the one we've been putting on the watch for a long time, which is the CRB index and this band squeeze. Bollinger Band squeeze, basically what this is telling you is that we're in a low volatility period. So now, like, a lot of people ask how to read this Bollinger Band squeeze indicator. So if we're looking at a band squeeze, it's not like an overbought and oversold indicator. A lot of people try to read it that way. That's not right. Basically, when it's within that blue area, this is when the volatility is really low, telling you that a big move is coming. Which direction, we will not know, but it will happen one way or the other. In the 2000s, it was obviously to the upside. When it was basically 2017 all the way to 2020, it broke down into COVID and had a big move to the downside. And then now we're moving back into that range. And now it looks like we're possibly making a breakout to the upside, which I would follow that. That's how you read a band squeeze. You follow the pattern, the primary trend, and then the breakout direction. Now, right now, it's hitting the top Bollinger Band. There's not a Bollinger Band on this chart, but it's hitting the top Bollinger Band. It bounced off of that a little bit, but I do think that this is probably going to resolve further to the upside, meaning the whole energy complex, meaning if you're looking at gasoline, heating oil, energy stocks, these are all probably going to follow with it. So I do think that this is a significant chart. I've been highlighting this for probably 6 months, telling everybody to keep this on your watch list because when it breaks, it's going to be crazy. We're
Well, I think
almost
you've been
in.
highlighting it longer than that, Jason.
It's probably been a while.
Ever since it entered this blue zone. And I mean, looking at this chart, it looks like it entered that like early 2024. So, I
Yeah.
mean, we're pushing 2 years of this Bollinger Band squeeze. So the resolution of this, I mean, holy shit, Jason, I
It's
think
going
this
to
thing
be
could go
insane.
absolutely vertical and get back to this great financial crisis peak. And I mean, 6 to 12 months is where my head is at. And that's a big move from here. But I think that is the setup. I think the bet is to see CRB back at the 2007 peak or 2008 peak by early 2027. That would not surprise me at all. And we're seeing confirmation. We mentioned earlier, this is a lot of energy in the CRB. And, we talk all the time about, ExxonMobil breaking out, probably going to $1 trillion in market capitalization. XLE breaking out to new all-time highs. If you look at equally weighted energy, the RSPG pressing up against that 2014 peak as we speak. I think a breakout is coming there. We're going to see continued expansion and participation in energy. And right now, as we talked about earlier in the show, we're seeing a very weak dollar environment right now. We're seeing emerging market currencies rip, and that is why the international oil and gas stocks are outperforming the United States oil and gas stocks like ExxonMobil. Just, ExxonMobil has been amazing, don't get me wrong, but, these international stocks have been even better. So here's an equally weighted basket of some of the largest international oil and gas stocks all listed on this chart, and it's breaking out of a massive base, trading at the highest level since 2008. So I think this is a great pond to be fishing in right now. And Jason, we talked earlier, going back to this chart, buying things that are working and selling or not buying things that are not working, like technology. Technology all year long has been under pressure, and we're seeing that rotation flow into energy. So energy relative to technology is climbing out of this massive bearish to bullish reversal pattern. And I think this is the trade for 2026 right here. I think this is a theme that is here to stay. So we're going to see these, pretty, at this point, they're pretty well defined downtrends and things like Microsoft. Look at Robinhood and Palantir, these former market darlings, these high flyers, the Magnificent Seven. These stocks look pretty heavy here. And I think that money is going to flow into energy. And that's exactly what this intermarket ratio is showing us.
Yeah, no, I think so, Sam. And I think we're just got to continue to ride the strength. There's a bunch of people who will write me from time to time, Sam, and we'll be talking about something like energy. And we'll say, okay, well, energy's doing very well. And they'll be like, oh my gosh, do not cheer on energy. And it's like,
Are
that
these the
that's
ESG freaks?
no, well, there's that too. So you're right, but also there's this. These are people who are like, well, if energy goes up, not to mention this was a lot of my research. Now I don't know exactly how else other people found it, but my research has been like, yes, energy is one of the things that kind of ends the cycle most of the time. When you see energy really start to get out of control, oil start to get out of control, puts a lot of pressure on the economy, stocks, and so on, and then the market goes down. However, as traders, like we do not care. I don't give a shit. I couldn't care less. It doesn't matter. I want to be in what's working. Like, that's it. Like, I don't care if it's energy. I don't care if it's solar. I don't care if it's the ESG funds are working great. I'll be long all of them. Whatever the hell it is, I'm going to be long what's going up and out of what's going down. And I'm going to be very pounding my chest bullish on things when they're going up because that's the market confirming what I already think. It doesn't matter what I think, but it matters if the market is confirming it. If my models are saying I want to buy energy and then it's going up That's telling me I should be very bullish on energy and get more and more bullish. And this is a thing that happens to traders. Like as you've been trading for a while, new traders, when things are going against them, they get a little bit more optimistic. Okay, well, I'll keep adding to this position because, oh, it's going to be great at some point soon and it'll go up. And look, I'm getting it for cheaper. And they start to add more and more to their positions. And then a good trader will be like, oh my gosh, it's going against me. I'm wrong, out. That's it. Simple as that. And so when it's going up, new traders get less and less optimistic. They're going to start to get pessimistic, going, I got to get these profits the hell out of here. When it's moving our direction in energy, we want to be more optimistic. It's the reason why we were able to ride the gold miners last year. A lot of people in those gold miners would have been the hell out of them, Sam. They would have been like, screw this, it's up 50%. I'm done. Like just the gold mining ETF up 50% for the year was insane. That doesn't even happen much. And then we get 100. Nobody who's just feeling that would have just kept on that trade. But if you were just in a situation where you like know your trend models, trust your judgment, and can be optimistic as things are working your direction, you can let that run. And you can use a trailing stop like I did. You're never going to catch it perfectly. Like I'm not going to sit up here and tell you guys I caught silver perfectly. Sam had great targets for these, and some of our members probably got out very well. It came back against me, but riding this thing from the 20s all the way to 90s, I'm pretty happy with that. I'm
Yeah,
not,
you're doing okay, Jason. Put up a
yeah,
banner year
yeah,
last year. So, yeah,
exactly. And this year's starting out really well. And so, like, once again, it's just a continue to be now that this is the difference this year, that energy, which has been trash and very hard to trade for a long time. Now energy's leading the way. Let's stay long. This is a great chart.
totally. We have a question here from Jerry. The Trip Davidson says, stupid question, but are there any commodities that do not benefit during a CRB rip? Specifically asking due to the record short positioning in sugar. So let's go back to that CRB chart showing that Bollinger Band squeeze with the price breakout. And it's a really interesting question, Jerry, because you know this is very, as we mentioned earlier, it's heavily weighted in the energy commodities. Of course, you have a broad basket of commodities, but it's very overweight energy. So that's what's really going to drive this index. And commodities are beautiful because there's always ones that are in bull markets, and there's always commodities that are in bear markets. And right now you talked about that record short positioning in sugar, and we're seeing these soft commodities pretty much across the board come under pretty significant selling pressure, and that's really wonderful. If they're going down, they continue to make lower highs and lower lows, then you can be short those, and you can own things like precious metals that have continued to put in a series of higher highs and higher lows. Energy could be joining that list here, still kind of range bound at the commodity level, but I think that looks really interesting right now. And yeah, I don't, what do you think about that, Jason? Like, I don't think the entire commodities complex moves together. They rotate. It's just like the stock market. Sometimes technology is working, sometimes utilities are working. Sector rotation is the lifeblood of a bull market, whether that's in the stock market or the commodities market.
I think so the only thing I can really get into this on would be Jim Rogers' book, Hot Commodities. It's a hell of a book. If you guys haven't read it and you want to know more about commodities and trading these, like Rogers trades the stocks in the commodities market and, looks for those 100x winners and whatnot. That's the book you want to read. And it also talks about the cycles, the way they work, because he also trades the commodity futures themselves like I do. So he talks about the cycles and the way they work. And yes, most of the time you're not going to see everything move together. It's the reason why, like, you'll see gold, silver, all the metals moving, and people are like, there is no inflation, idiots. Why are you guys talking about this? And I'm just like, oh my God. Anyways, and then you get to where even in 2020, a lot of people forget gold topped out in August 2020, went completely sideways. Well, energy, sugar, copper, I mean, everything across the board just ripped to the sky and never looked back. So a lot of people forget about that. So yes, they rotate a little bit, but I think at the end of the day, if you take the whole commodities complex and you equally weight it, which we do have a chart to do that, CRB is very weighted heavily in energy. But if you equally weight a chart in all of the commodities, I put money that in this type of environment, we will continue to see that in an uptrend.
It looks
And
very similar to the CRB, which I think is a coincidence more than anything, but it's a very similar, just sideways consolidation into a fresh breakout. So, yeah,
yes.
good point
So,
there, Jason.
so it'll be one of those where it's like, hey, maybe we're in a scenario where gold isn't moving up, but maybe gold isn't going down nearly as much as everything else.
And we
Um,
have the secret squirrel. Wants you to repeat that book you just mentioned, Jason.
Hot
I
Commodities by
Hot Commodities by Jim
Jim
Rogers.
Rogers.
I
Yes.
will Google that and drop it in the chat for everybody to
Yeah.
check out because that
And
sounds wonderful.
if you guys also ever have questions, like feel free to write Sam or me anytime. We'll try to do our best to answer, or hit us up on Twitter. We're pretty active on there. But yeah, so anything you guys want to know, feel free to reach out. But yes, but basically looking at this, you will see the rotations, but it won't be a rotation like people think. It won't be like 2023, 24. It was like, okay, we saw a rotation into one commodity, which would be cocoa. And then 24 is like on one other commodity, which was coffee. Coffee did very well that year, and some of the gold did well, and so on. You won't see it quite like that. It'll be much broader. So basically, think about it. All the metals moved last year. This year, you might see a scenario where all of energy moves, and maybe some of the grains start to move as well. So that's what I would be looking for here. And once again, I don't know if gold's done yet. I want to say it is because I'm out of the silver trade, but I don't know if gold's done yet. I do still have my
I
gold
doubt it.
position got
I
stopped.
doubt it, Jason. Gold's going to 8,000, baby.
I think you're right, Sam. I don't think there's anything wrong with that thinking at the moment. It's gold has held its primary trend. Silver really held it too. It just was that sell off was so massive it hit the stop pretty quickly, which is
Totally.
why you run
Probably going to
silver.
take some time to repair that damage, but man, the underlying trends are still pointing higher.
Yes. So continue to, pay attention to all of these across the board. I don't want to just go, hey, my gold miners are kind of getting hit here. I want to sell all of these so I can do this. And then when I'm having a day like today and going, oh my gosh, my energy stocks, I better sell all my energy stocks and start putting them into something else that I think is going to move. Like, you don't want to do any of that. You want to kind of ride those primary trends as they go. Something like silver hits a stop, I'm out. Something that gold doesn't, I'm still in. Something like energy stocks start to get great buy signals, which started this year. We're in those. And just take the trades one at a time and don't overthink it.
Totally. Great advice there, Jason. That is all we have for all the time we have for today's show. But
Oh, we got to bring up one chart, Sam. We got
you
to
want
bring
to
up
you want
the
to
Fro
cover one
chart.
more before we
One more.
bounce?
Yes,
What do you
this
want
the
to
Fro chart. The Fro chart.
Pro chart? All right. Frontline PLC. This is for all you gamers at home, a marine shipping stock with $6.6 billion in market capitalization. So one of the largest in the industry group. This is headquartered in Cyprus. Shout out to Cyprus. I'm dying to go there. Sounds wonderful. Sounds like that's where all the rich Russians go to vacation.
Nice.
That's just what I've been told, Jason. And
Very cool.
I've heard those rich Russians know how to party.
Did you
So
ask? Did you ask Grant? Grant would probably know.
Grant said it was a good time. So yeah, I trust Grant's judgment when it comes to
Same
that.
here. Same here. Talking to Grant about the bathhouses in Russia was
Yeah,
pretty amazing. So shout out to Grant in bathhouses. But
yeah,
anyways, so if we're looking at frontline here, well, I want to bring this up today. Now, we've highlighted this before. I highlighted this at the Portfolio Accelerator event a few weeks ago that it was a buy, but now it's finally breaking out of this major base. If you are looking at getting involved, now, once again, shipping stocks are the most volatile, hard to trade stocks probably in the entire market, but there's a lot of money that can be made. Remember, this is also, I hate dividends. Generally, we could have a whole conversation about that one day. But if you're a dividend guy, like a lot of people look at the shipping stocks and be like, oh my gosh, they have really high dividends. There's a reason. They're paying you to hold this shit because it's going to have some rough times. So as a trading vehicle, though, and as traders, they're great trading vehicles and they make a lot of money. You're talking about these 10x, 20x winners. And this is one of the biggest names. So it's not going to be like a 20x, but it still could be a 5 to 10 pretty easy. And breaking out of this massive base and this huge smile here, I think it's a good time to kind of look at this. I mean, you could even look at that as a cup and handle, but this is a really good setup here. It's a monthly chart, so this would be a long-term trade, but it's basically right at a buy that shit signal for me, meaning
A
it's right
buy
about
that shit signal. I love that.
I have a lot of buy that shit signals. I was gonna put it on here, but actually I didn't. I was just gonna highlight the base, and it was breaking out of the base right as I took the shot. So if you guys are looking for a trade here, this is one. We usually don't highlight trades on here. We save those for members most of the time, but I thought this was one that I could highlight here today, just for people to get a look at the shipping sector and something that I'm looking at as a buy for sure.
Totally. I love that, Jason. I love the shippers. I should have brought along my Marine Shippers Index because it continues to rip to new highs. It's not just Frontline, it's the entire group of marine shippers that continue to work. So we've been pounding the table at that at All Star Charts Gold Rush. All of the members get the trade ideas for the marine shippers, all the energy trades, the precious metals trades, currencies, bonds. We cover it all here at All Star Charts Gold Rush. And it is $12.99 a year to be a member. And if you join and don't like what we have to say after 30 days, that's okay. We can still be friends and we'll give you your money back, no questions asked. So if you'd like to learn more about what we do at All Star Charts Gold Rush, you can hit the link in the YouTube description and check it all out there. But really appreciate everybody being here. SM Traz. We have Jonathan asking for thoughts on soybeans. You know, Jonathan, I brought along this, it's not soybeans, but the soybean oil chart.
Yeah, I'm along that.
Ooh-wee, Jason, this looks very nice. This is what the pattern gurus out there would refer to as a cup and handle pattern, I believe. This is a textbook accumulation pattern, and this is exactly what you see before massive moves higher. And I think a big move is coming for the soybean oil futures. And you've seen a prolonged accumulation pattern. You know, you could zoom out even further on this, but it's just been dead sideways for a very, very long time. And I think momentum is finally coming into soybean oil. And I think that's pretty much the same across the board in the soybean complex. I don't think the other charts are quite as clean as this one. So this is probably my preferred vehicle in the complex. But yeah, I like it. Do you have any thoughts on soybeans, Jason?
I am long. That's it. So if we look at where that breakout zone happened back in 2025, we actually made a new 52-week high and gapped right out of it. And then we kind of came back, consolidated, and now we're moving back up again. I've been long since that one in 2025. Came back very close to my stop, then continued to move higher. I do think right now it's another buy zone. You definitely want to be long at the moment. And once again, it's always important. And Jonathan, I know you know this as a futures trader, which is understand that soybean oil and meal are different things. Sometimes they can be very inverse. So right now, I want to be long soybean oil over soybean meal, and I want to be long soybeans actually as well. Those look really good as well. So I think there's a lot of areas. Corn is starting to perk up. Wheat is starting to look like it could move. I think for you guys who can only trade the ETFs, DBA is a good one to look at, but there are ETFs for soybeans. SOYB is the soybean ETF. WEAT is the wheat ETF. Corn is the corn ETF. So you could be long these things currently and start looking for positions in these and see where we end up. I think we can end up in a pretty good place in this market going forward. But I just think it's a be careful here. Don't get too crazy bullish on it. Just take the positions as they come. And I think soybean oil just gave you another buy.
We have one last question here. We have a lot in the chat, and again, I really appreciate all of you being here. Jonathan, Cement, Grays, I mean, all of you are so awesome. Thank you for being here. I wanted to get to this one though. SM
Yeah.
Traz asked, "Where in the holy hell do you get access to soybean oil futures?" And I'm pretty sure you trade those on the CBOT, right, Jason? Or do you trade
Yeah,
those?
so if you have basically just get futures access is all you really need. Once you get futures access, then you figure out the individual exchanges, you get the data for the exchanges. Sometimes it's kind of expensive. But at the same time, it's well worth it. You're going to make a lot of money. And so there are ETFs for some of these, but soybean oil, you can only trade that on the futures contracts. So I definitely start looking into that. And most people, I think that this is an important thing to think about. And I've said this for years. I know futures aren't the most, I talk about futures a lot, and I know they're the not the most popular thing out there because not a lot of traders use them. However, like in commodity cycles, like you want to have access to them. For me, as
Totally.
I
It's so much better than trading something like those ETFs, like you mentioned before.
Yes, for me as I started trading, I got into, the first Market Wizards book, and I started learning about the turtle traders, which were guys that basically traded nothing but futures markets for Richard Dennis back in the 80s. And then, you start to learn about all these trades that they put on, how much money they made in all of these. And so you can make a lot of money in the commodities markets, especially with futures, and also you get a lot of leverage. So options, they give you leverage, but there's also time decay. There's also volatility. There's also all of these things that you got to understand the Greeks to trade, which makes sense, and they can make a lot of money. There's a place for options. I do trade options as well, but futures, you don't have time decay. If I sit there and let a contract go to expiration, they're just going to basically liquidate it and send me my money back. You basically have the same amount of leverage, but also taking away theta, taking away all these things that a lot of new traders get killed by. Not to mention, don't use as much leverage as you can on futures. You can use a ton of
You
it.
can get slaughtered, no doubt about it, Jason. It's great for making money, but man, you got to be careful with it.
Jack mentioned
ASAP Jack says futures
futures leverage.
leveled up my portfolio big time. The leverage is unmatched, in my opinion.
That's the damn truth. And so continue to look at those areas and learn about them. And honestly, a great way to learn about them because when I first started trading, I didn't have the money to trade futures. I just paper traded them, just to get an understanding of what the hell they were and how to trade them and how to use the leverage and so on. I don't think paper trading really teaches you how to trade, so to speak, because you don't have money and actual cash in it. But it will help you to understand how to trade these products. Same with options. If you never trade options, feel free to open a paper trading account and mess with those, or something with a small amount of money to mess with those. You can do that with options. With futures, you have to have a lot of money to trade it. So I always suggest if you don't have the cash, just paper trade them at first, get an understanding, and then go from there.
Totally. All right, Jason, this has been another awesome episode of Gold Rush here on Stock Market TV. Again, if you want to learn more about what we do at All Star Charts Gold Rush, you can click the link in the description on YouTube. And if you don't mind, leave us a like and subscribe to Stock Market TV so you don't miss any more content that we bring to you because we are crushing it here, bringing alpha to the community here, the best community in finance on the internet, Jason. So I appreciate all of you being here. SM Traz, Jonathan, ASAP Jack, the Cement Grays, all of you, Jerry, the Trip Davidson, Frey Lee, all of you, thank you so much. And we will catch you again next week for another episode of Gold Rush here on Stock Market TV.
See you later,
Adios.
guys.